Well, welcome again. We'll get this going again. Welcome to the Friday, December 20th, 2019 pre-market rundown for TiggerCharts. And the mic was off for a second there. I'll put it back on. I want to wish everybody a happy and a healthy holiday, whether it's Christmas or Hanukkah or whatever you're celebrating. Thank you so much for joining us throughout the year. Thank you so much for providing us with the opportunity to spend some time with you talking about what's going on in the world of investing, specifically related to technical analysis, fundamental analysis, and of course, economics. We're going to cover all of that today. So just want to mention that that we will be continuing this through 2020, and we will make sure that Friday mornings are filled with some really important information that will guide you through what's happening with the investments. Everybody can hear me now. Make sure that we can all hear what's going on here. It looks like we can, so that's good. I'll mention before we go any further that this is not a recommendation to buy or sell any security. It is simply an educational place for you to understand more about what's happening along the way when it comes to investing, giving you the opportunity to find out some of the things that are popping, some of the things that are playable, some of the educational ways that we look at things in relation to the markets when it comes to charting, etc. Of course, one of the things also that's really important is that you provide us with some of the stocks that you're looking at, some of the things that you want to see, and that we can go from there. So let's get into this right now and look at what's happening with regard to the markets right now. Let me kind of pull up a few things here on my side so I can mark up and create the annotation. And what else do I want here? Okay, all right. There we go. All right, hello. All right, everybody can hear me? We're going here. Let's take a look at what's happening, and let's look at what we have. Well, we know that, let's kind of click this off, that the headwinds are resolving. Big resolutions into the end of the year. Really what we're seeing is that there is a significant amount of things that are just one by one getting resolved. We have this skinny partial trade deal, right? The phase one that may work into phase two. Phase 2A, phase 2B, maybe even 2C. It's going to be an elongated process, and we're going to still have tariff overhang. What happened? Well, truthfully, not much. Supposedly, China's going to be buying some more soybeans, some pork products, and some other goods, establishing a new buying limitation or requirement of about $200 billion over the next 2 years. That's what we think. I can't say that with certainty because you know what? There is no certainty because nothing's in writing as of this point. We have the Brexit situation at least coming to a resolution. Markets like clarity, so there'll be some clarity there. We also have the situations with regard to the impeachment. We know that President Trump has been impeached. Now it needs to move to the Senate. We pretty much know the resolution of that as well. We have the USMCA getting resolved as well. So a lot of things are just being knocked down one by one, and that's why you're seeing some of this. We still have the question about the repo market where the Fed is pumping in close to, I think it's totaling now about $400 billion into the repo market recently to try to make sure that there is liquidity into the end of the year, end of the quarter, end of the month for December. They're going to probably push in another close to $200 billion by the end of the year. And if you remember recently, we talked about this. We showed a chart and showed the comparison of when monies are put into the repo market in a non-QE, which we'll talk about in a second, is really getting its way into the financial markets due to liquidity. So financial markets reacting pretty favorably. Right now, we have the Dow Jones Industrial Futures up 50, the SPUs or the S&P 500 up 4.5 pre-market, and the Qs up 21, following on what we've seen as we talked about the potential for a Santa rally. Even though valuations are getting rather stretched, it's something that we really need to consider and look at as a seasonal kind of trade. You often see this at the end of the year because of some tax cleanup that goes on and other things that are happening that make sure that there is a lot of activity rotation throughout the markets. We also know something very important, and I think this is probably one of the most important things that we'll talk about here. The Fed is on hold. They've talked about it time and time again over the last couple of weeks. They are probably going to be on hold for the entirety of the year 2020. Now, how do they make that kind of bold prediction? I have no idea, because the last time they did something like this, markets fell apart. They did it in an opposite manner. What they did last year was They said, you know what? We are on an automatic increasing rate hike program because the economy is doing so well. And what happened there is things got overdone to the downside on that commentary because they forgot to say that, unless things are different, they said basically they're going to continue doing this for some time. And the expectation was that this was going to be happening through 2019. So where are we now? When you look at where we are now, we have the opposite of that, where they're talking about how we're going to have this automatic, easing process, or at least not changing anything through 2020. And when they do that, and when they talk about not changing anything through 2020, the concern is that now we're going to have an overshoot to the upside, almost identically opposite, 180 degrees differential from what we saw back in the end of 2019 and 2018, where we saw the markets come down from November to December. If you look at this, kind of a mirror image right now of the upside versus the downside that we saw. The impeachment resolution there, pretty much a nothing burger, right? We knew that they were going to vote along party lines. Whether you support President Trump, whether you support the Democrats, whether you're against him, you hate him, you love him, it doesn't matter. The fact is, this is more of a procedural matter right now, because if we have all of the party lines continuing to stay solid, it's going to get to the Senate, nothing's going to happen. Now, all of a sudden, we're getting a little more concerned about, well, is it actually going to go through the Senate? Is Nancy Pelosi going to hold it off? A discussion for another day, a discussion for politics. I think really the read-through for markets is very simple, that, well, it's a nothing burger. I mean, plain and simple, right? Nothing's happening there that seems to be very significant. We have new highs for the markets. Mega cap names are continuing to rally. We are seeing that. We are seeing that the S&P 500 is up about 27% for the year. The NASDAQ is up about 30% for the year. The Dow Jones Industrial is up about 21% for the year thus far, looking to continue its gains throughout the end of the year. Now, again, unless there's any significant amount of move, we saw some discussion from the Chinese saying that they really are concerned about the process and some of the things that we talked about in the deal. But if we don't see any major changes throughout the end of the year, the probability is that we will still see this upward action, a couple of bumps along the way, but finishing the year in what? A week and a half, pretty much on the upside of the markets and close to where we are at this point. The reason why I bring up the new highs for the year and then talk about this mega cap names is we realize that most indices that are followed, the S&P 500, the NASDAQ, Russell, these are cap-weighted indices. Market caps rule. Therefore, if you see something like an Apple and a Microsoft up 60, 70% for the year, 50% for the year, and they hold a total of 25% positioning inside the Qs, the NASDAQ 100, realize how much of a bump that really made for that particular index. As a matter of fact, the top 10 names inside the NASDAQ 100 make up 50% of the overall performance because they are a 50% weight inside of that index, tilting very significantly to the mega caps. So as people are moving more and more towards that, the mega caps are doing their share buybacks, increasing their dividends, and there is a flight to, I don't want to call it a flight to safety necessarily, but a flight to the mega caps and a momentum into the names that have been performing. What we're finding out is that those indices move very significantly. So the equal weight index, if you break that down, is about 5% or 8%, depending on what index you look at, below the large cap capital weight index, market cap weight index. One of the important things we've seen recently, and I think this is really important to mention, is that we're seeing that financials are participating. We're seeing that the financials, whether it's Bank of America, Goldman Sachs, and JP Morgan, of course, and some of the other names in the financials, even the smaller financials, are in fact holding on to some very good gains, reaching all-time highs recently. And that's really good to see because it's really important to understand that the financials are really the bedrock of the market. And you say to me, well, why is that? Because financials, every analyst loves. They love them from the day they were born until the day they die. And if in fact financials are not participating, realize it's kind of a risk-off scenario. Once you see the financials participating, you realize that what's happening is that investors and analysts have embraced the idea that financials are really good, and when those really start moving, realize the rest of the market is probably moving as well. Because what's happening there is that you're finding that the bullishness underlying the bedrock of the market is there, and therefore you can look at that as a confirmation signal a lot of times. We're also seeing a new narrative form right now when it comes to international markets in particular. And you're looking at things like Germany and Europe, which are on the brink of a recession. You're looking at China, where the GDP is 6%, possibly falling below that. You're seeing Japan possibly entering into recession after another sales tax increase went through. And now we're seeing the normal slope down of the pull forward effect that happens very quickly in Japan because people go out and buy things before the sales tax goes into place. So what we're finding right now is a conversation that is permeating most of the media right now, and you'll find this, you'll hear this, and you'll see this, and what you'll hear is the bottoming process. We're finding a bottoming process. It's reminiscent of the green shoots back in the day of Bernanke, where Bernanke was talking about the idea that green shoots were everywhere are starting to show up, and people got excited that, okay, this is the worst we're going to see. When we have right now is the bottoming process is the thing they're talking about. But we still have some weak eco. Let's go through the rest quickly. Economic indicators, housing market slowing slightly, but that may be some seasonality in there. Leading indicators, 0 coming in yesterday. GDP estimate, the third revision today at 8:30 was at 2.1. We'll see PCE prices, which is the Fed's preferred inflation gauge, and that will be at 10 a.m. today. Next week will be a short week for the markets. Moving the markets this week, pretty much same old thing. Clean up into the year end, and Fed's QE4, we're calling it. Even though they don't want to call it QE, what they're doing is clearly quantitative easing and raising it by about $100 billion per month, more than they did during any of the preceding QE programs, except for the one drop in of $800 billion they did back in 2009 to square up the banks. We're going to talk about a variety of stocks: Tesla, SPE, Guess, GameWorks. We'll talk about some of these. And I want to mention that put your stocks inside of the, let's see here. I do this every time. In the chat, put in some stocks that you want us to take a look at, and we'll be happy to do so. So let's get over to here. I don't think I loaded these in here this morning. And we'll look at GME, and we're going to look at Nike came out with earnings last night. We'll look at Tesla, look at Facebook. Okay, so let's take a look first of all at the markets where we are. A lot of you have asked about gold historically. We've seen, we've drawn some boxes here over time. And let me make this a little bit bigger here today. This is a daily. We do this for education. You can do this for a 30-minute, 10-minute, 5-minute, weekly, monthly, whatever particular time frame that you're happy with and that you like to look at. But we do this because each of the things we talk about here are consistent with any time frame that you look at. On the top, you're looking at the Commander series, where we have multiple time frames that go from, if you want to do a 30-minute, which is here, which is the minimum you could utilize, 60-minute, 90-minute, 240-minute, whatever you want, daily, weekly. Again, whatever you want, it will give you alerts across the board for signals that actually are long alerts or short alerts inside of this panel. So you don't have to worry about missing anything. You can always look at your message center of what's going on, load in a bunch of stocks, symbols, currencies, futures, whatever you want, and it will all show up. And by the way, there is a 10-day free trial. The trading store is working again. Oh, I'm going to put that in here. Let me put that in here. The trading app store is back up and running. Anybody that does, in fact, become a subscriber, first-time subscribers, will get a 4-hour course that goes over all the technicals and a great education that is timeless. It's online. Do it at your leisure. If you do subscribe, send us an email at support@TriggerCharts.com, and we'll set you up for that 4-hour program where you can take a look at that whenever you want. $199 value. It's $149 to get the subscription to the Commander series, and that means you basically got a freebie right there. So there you go. When we're looking at gold, let's take a look at this here on this part of the screen. And what I want to do is very simply take a look at a couple things. I want to look at, well, we're going to look at this line, kind of this red line, which is our resistance, which now is support. Look down here, 139.38. Look how well we're seeing that this is holding. We have this consolidation pretty much in this range right here, from about 139.38 down to about 136.82. Below 138 is a bit of an issue for here because one of the things we're also seeing is that we have this area of what we'll call it when we look from right to left, looking from right to left, always looking from right to left. I tell people that because that's part of the training that we do. all the time when it comes to our indicators. These are very powerful indicators, by the way. These are the indicators that are used by institutions. And the way that we've provided for you here, a very easy color-coded process, and I tell you this all the time, is because I needed color coding for me. We built this for me originally for when I do my trading and analysis, because I want to be able to quickly scan a chart, understand where we are. Are we in a bias to the short side, in the bias to the long side? Is there any congestion? What's happening there? So it's easily viewed when we just take a look at all these lines right here. So what we do is we can take a look at this and we can see there's a lot of congestion here, not able to get below. And in fact, let's kind of clear these for a second and zoom into something here as we clear all of these. But here's what I want to show you. I want to show you something that, look at how nicely this support line was held for a while. But more importantly, better than that, if we look here, we're going to use something real nice. We'll look at this support line right there. Couldn't get below 138 really for a long period of time. Held up. Right now it's flat on the morning. But right now it looks like gold really, to be honest with you, can go either way. We are still seeing a trend that is a little bit higher. And if you look longer term and stretch this chart out, you'll see that it's been in a general uptrend this year, which is very interesting. But more importantly, it really hasn't been able to go down very much at all. And I think that has something to do with the uncertainty that was there. And even with the fact that some of that uncertainty has resolved, as we just talked about, we're not seeing that gold really has any downside that has been very significant. I think that's important and showing us that things are pretty good in that space. Let's go down and take a look at the let's look at the Qs for a second here. I mean, you don't have to be too smart with charts here to understand that we have been in an uptrend since October. As a matter of fact, look at all the green here. The green shows this uptrend. The bias has been basically towards the upside. Got you out a couple of times here, avoided some of the pain, got you back in, so you didn't lose anything either. Right now, the bias on the long side going up. We see the futures are still packing a mean punch this morning, and that's pretty good. Let's see what else we got there. All right. Yeah, we have a request to look at Nike. Came out with earnings today. Nike is down 40 cents. Nike has been on a tear recently, obviously due to the fact that the trade deal, probably right there is the trade deal issue. We can look at a couple of stocks like that. Let's just go here. You can see the pops and the move up for like Best Buy when we have some trade deal resolution. That's an important area because the trade deal has really a lot to do with what's going on with regard to the cost factors for these companies. But let's go back to Nike. They had a really good quarter. The margins were in question, but they had a good quarter. And I don't think that a lot of people may look at this as, oh my gosh, the margins are being squeezed. They're going to look at it like, oh, the margins were squeezed because of the tariffs and all that. But now that we kind of are not putting on new tariffs, maybe they'll source them somewhere else. And we're not too worried because the rest of the numbers, when it came to Nike, looked pretty good. The only thing that I can tell you is that this upward slope here, this significant move from 94 to 101 ahead of that, may be resolving a little bit down. But where does it go to? Well, the one thing you look at with Nike is we could just simply draw a box here, and we can see that really the downside of support back to about 94 is the level. I mean, it looks like it's a little bit overdone here. I mean, we called a long position at about 94 and change right here, right at the start of December on this, and that was the algorithm came up with a nice long position there. This one's interesting. GameStop. GameStop. Let's kind of. I want to zoom out on GameStop because I think it's important. This stock is miserable. Their last earnings report read more like an obituary. I mean, that's the best way you can look at it. It was a horrible earnings report. Meanwhile, stock dropped down very significantly from $6 to $5, on its way back up a little bit today. It's probably going to consolidate. If you look from right to left, as we talk about all the time, and you look in this range, I mean, look at this incredible amount of congestion that you have there. It's an area that you may not necessarily want to play too significantly. Maybe they're a buyout candidate. Maybe there's going to be some M&A here. Maybe private equity will come in and do something with this. I mean, overall, it does not look like a significantly good position. However, let's take a look at one thing here. And let's take this box and kind of go over to here. I want to take this level here. see if I can do this. There is a basic area of, we'll call it black, when I look from right to left. Really a launch, I would say, off of 659, if we can get to that point. Right now trading at 610. You have the opportunity to bring this thing back up to about 750. Well, $1 on 659 is not too bad of a total trade. However, again, it does not seem like the congestion here would necessarily allow that to go through combined with the earnings report, but maybe there's something going behind the scenes. And you have to realize it's really important to understand that even though there are some things you may think about, there are things that you may have preconceived notions about. I don't like this stock because of this. I only play online games. I'm not using GameStop anymore. None of my friends are using GameStop anymore. Therefore, it's no good. Fact of the matter is, there's something to be said about looking at where this is on the chart and stepping back for a second and saying, you know what, maybe my opinion doesn't count so much. Maybe it's what we should be looking at for the charts. The one thing that I'll share with you on the chart is the aileron is still negative, starting to turn up a little bit, but still not in a good enough way, not above the zero line. The momentum is not there with this stock. Tesla, on the other hand, is peaking out towards the top of my chart where, you know, kind of soon this bounce off of 340 up from the September low, about 220, almost 100% return on Tesla over the last 3 or 4 months. A lot of reasons for that. Some short covering going on probably into the end of the year. Some concern about, well, maybe if I don't have this, it's going to run away from me and I got to get into it. The China plant's being built, the German plant's being built. All that goes into place is pretty important. Right now, when you look at this, all-time high. So all-time high gives you kind of an airy look. There's nothing to the left. Tesla could easily come back to 350, I would say, 354. Retest that, probably retest this zone right there, about 348, because it is moving on pretty much nothing right now. Facebook is currently trading about 74 cents higher today. What's 206.68? So we're right above the top end. 206.68, right about there, right about the top of that range, going from that peak in August. We'll see if they can get past that. The bad news keeps on hitting Facebook. Nobody seems to care. Another breach of 125 million names recently. Nobody seems to care. And that's good when you look at a stock like that. I mean, I still believe from a fundamental basis, the stock is not worth the levels it is, even though advertising is still pretty strong. I do believe there's going to be a move in 2020 to considerably restrict the services, the messaging, and the collaborative abilities for Messenger, Facebook Messenger, and their other Instagram and WhatsApp. The ability to talk with each other is being, Department of Justice looking into that. Let's see what else we have. I had a couple. Oh, SPCE up and again. This is an interesting chart that I just wanted to show you because it's just so flat at like this whole range right here. See this whole range here? Forever. It just doesn't move. And all of a sudden it makes this big move up and a big move down. Something's going on. And this is the Virgin Galactic. This is part owned by Richard Branson, a part of the Virgin Group. It's their space division. And we're hearing a lot more about this space travel right now. And this is probably one of the, I think, one of the only pure plays that you can have in travel. Trading at about $10.50. You can see that if we zoom in on this, it broke out above a nice zone here. Probably has the opportunity to get to about 1091. Right now stopping right on this level at 1052. If it breaks above there, you may see a very significant move back up. And if we continue with next year's potential theme of being space travel, whereas this year we had technology and we had, I would say, biotech. That was kind of the themes this year. A lot of stuff going on there. A lot of FDA approvals, a lot of technology breakthroughs, 5G, etc. I think next year you may start seeing a lot more about space, SPCE. All right, we got time for a couple of others that we're going to talk about. Let's see what else I have here. Let's go back here. I had some other ones I want to talk about. Oh, yeah, GES. This is Guess. This is interesting. There has been a real significant amount of differential between the various retailers that are out there. Some are doing well, some are doing very poorly. The mall-based retailers are not doing very well. Obviously, online and more of your online presence, and if you have any specialty products, it may be helping out. Right now, if you look at this chart, we see this breakout above, this really nice breakout from this miserable level. We see that the aileron is positive and doing very well from a momentum standpoint. And you see that we are getting up to a really important level of resistance right here. What you do is you just simply draw either the box that we talk about, or you can draw the line. You see where there's multiple connecting points that we have drawn, and it shows you that there's some resistance here at about the 20, right where it is, 22 range, 22.12. Above that, you could possibly see right there, 22.96, and you know, kind of moving above there, 23.49. But there is a lot of congestion, just a whole host of congestion in this whole area right here. So it would take a lot to get through that. A lot of people that bought there and finally got back to their price are like, okay, I'm done. And that's kind of like what we're seeing right now. We got the market's moving up a little bit still, 92 on the Dow Jones. We have the SPCE up 10, 35 on the NASDAQ. So we're seeing some continuation of movement on pretty much lackluster news, lighter volume as we get into the next few days. There was one more. Somebody's asking me about GM. Okay. So General Motors, again, very similar to what the chart we just looked at there, right? You know, you have this for Bobby. We're seeing, Bobby, you're seeing that there is a massive amount of consolidation in the zone. There's a lot of areas that people have been betting on. I like to look for this area where we have the opportunity to find above this, probably above 40, which you got a little bit ways to go. But above 40, we start seeing some air. We start seeing some just blankness when we look from right to left, and that would be a really good point to look into as a potential long entry right here. We are showing a long signal right here after getting out of a really nice short, and you can zoom into that. You see the short was positioned at about 38, kicked back, got out about 36, went long, holding a little bit long. I would say this is a questionable long right here because of all the consolidation and the potential for, let's take this here. When we draw that line, there's a lot of lines that connect right across at 37.28. Currently trading up 24 cents at 37.50 this morning. So you may get a little bit of breakout, and the potential for that is where? I would say move it up to our next lines that connect, important lines right there, especially when they're longer lines, is $38. Again, you have a lot of congestion, a lot of work to get through those levels. I want to thank everybody for joining me and let you know that we will be here again next Friday. Make sure to tell your friends. Make sure to go over to TradeStation and check on the free offerings that we have there, as well as the 10-day free trials for all the TiggerCharts indicators. Some freebies in there as well that you could check out, like EcoTrack and a few others. I want to thank you very much. Again, have a happy holiday. Have a happy couple of days. Take some rest over the weekend. And thanks for joining me. I appreciate it.